one of those things that I would tell, someone newer just starting out is I would say, hey, focus on finding, good quality deals, because anybody can do that. It doesn't take, all the money in the world to find good deals. You literally could drive by a commercial property and stop in and try to talk to the owner, and you could be that first person that's ever done that. So I would say focus on the deals more so than the money.
Welcome to the Accelerated Investor Podcast with Josh Cantwell. If you love entrepreneurship and investing in real estate, then you are in the right place. Josh is the CEO of Freeland Ventures Real Estate Private Equity and has personally invested in well over 500 properties all across the country. He's also made hundreds of private lender loans and owns over 1,000 units of apartments. Josh is an expert at raising private money for deals, and he prides himself on never having had a boss in his entire adult life. Josh and his team also mentor investors and entrepreneurs from all over the world. He doesn't dream about doing deals. He actually does them, and so do his listeners and students. Now sit back, listen, learn, and accelerate your business, your life, and your investing with the Accelerated Investor Podcast.
So hey, what's going on, everybody? Welcome back to Accelerated Investor. This is Josh Cantwell, and I am so excited to be with you all. This is my first podcast that I've recorded in about 40 days. For those of you guys that I've seen on social media, you know that I've been down in Florida for about a month, about 5 weeks. Deep sea fishing, going on catamarans, checking out dolphins, walking and hanging out with my family on barrier islands. We've just been having a blast. And so I'm back. I just got back about 36 hours ago. And so I'm excited to have Andrew Keel. He is the owner of the Keel Team. His team currently manages over 20 manufactured housing communities across 7 states. They're currently managing over 1,500 lots and units, which is amazing. And so I was excited as I was kind of building out my calendar to get back into the swing of things, to get to know Andrew a little bit better and talk about property management, building out a team, and how do you do this? He manages properties across 8 or 9 different states. So for those of you that have maybe just bought your first rental and you're thinking, oh my God, how do I manage this thing? Or you just bought your next 100 units of apartments. How do I manage this thing? We're going to talk to Andrew today about how he manages over 1,500 units, which is amazing. Andrew, welcome to Accelerated Investor. How are you?
I'm great. Thanks for having me today.
You bet. So your expertise is around basically taking undermanaged manufactured housing communities. So anybody can relate to this. If it's an undermanaged single family home, an undermanaged apartment building, an undermanaged single family housing portfolio, and basically taking your proven systems to maximize basically the net operating income, which is what we all want, right? Taking a look in how do you turn over units, get more rent, create efficiencies in your operations. So tell us a little bit more about that. Tell us, Andrew, what are you and your team working on right now, right in the middle of COVID and all this craziness that we're experiencing? But tell us a little bit about your business. What are you guys doing right now inside your company?
Yeah, so we closed yesterday on 90 more units in Norfolk, Nebraska. So Nice. That was a big deal for us. I leave on Monday to fly up there, and I'll be there for a week, at the new acquisition, getting notices out and, starting our projects. We, about a month ago, purchased 140 lots in Crookston, Minnesota, which is just outside of Grand Forks, North Dakota. So I went up there initially. I have a team on site up there. That's a larger project, more infill and things like that. So yeah, we're in the middle of COVID, still executing, still buying deals. Back in March, I'll be honest, we were nervous. We didn't know what was going to happen. Yeah. There was a large operator that told us, he said, hey, you guys should expect to only collect 50% of your rents. So we were, worried and freaking out. But thank goodness we have collected over 95% of our rents every month, during the COVID crisis. So we feel really confident about the asset class of manufactured housing communities and, the recession resistance that it holds. So
nice.
we're happy.
Nice. So tell our audience, what do you define as a manufactured housing community?
Yeah, so manufactured housing community is a fancy way to say mobile home park, right?
There you go.
So, it goes by many names, but the stigma kind of catches people initially, and it catches some investors as well. But it's basically, mobile homes that are on land that we own and we rent out just the lot. So there's lower repairs and maintenance because we don't have to fix, appliances or AC units or roofs or whatever, because we just own the land underneath of the homes. So that's our whole business model, is built around the fact that, we're renting the land and not the homes themselves.
Got it. So help our audience understand, when you say undermanaged, what makes a community undermanaged or poorly managed and allows you guys to step in with your operational systems and your management systems and make it better?
Definitely. So the great thing about this asset class and this niche of mobile home parks is that 90% of these properties across the country are owned by mom and pop owners. So it's very highly fragmented. And these mom and pop owners have owned these assets for a long time, 20, 30 years. And some of them have been in the families for generations. So these mom and pops, they don't have a lot of debt on these assets, if any at all. Most of these are paid off, and they let things slip. The occupancy is usually not at 100%. Usually occupancy is down to 60 to 70%. And, the mom and pops are still making a boatload of money. So they're fine with that. And there's other deferred maintenance and so forth that we come across because, as the mom and pops, these owners are getting older, they just kind of take their foot off the gas.
Sure.
When they initially owned these things and they were younger, of course, they were more hands-on. They were fixing up the homes themselves when they would go vacant. But now that they're in their 70s or older, they've kind of taken their foot off the gas. So it leaves opportunity on the table for young, not even young, but just new professional operators that can come in and come in with some new energy to increase the curb appeal and aesthetics of these assets, and also increase the occupancy, bill back for utilities, things like that, to ultimately increase the net operating income and value of these assets. So there's mobile home parks are one of the highest asset classes for NOI growth opportunities, which is a huge component to, making any investment successful.
That's great. So help our audience understand, and you can use an example, maybe use an example of a recent deal that you guys just bought or took over. We'll do the same thing with value add apartments, even single family residential. I mean, we just bought in the last month or so 3 duplexes and a 5-plex that we're about to close on, plus an 80-unit apartment complex. All very much the same situation that you just described. Older owner, doesn't have a lot of money left, doesn't have maybe the energy to continue to manage the building, put money into it. They're ready to sell it, and we're buying it at a value price because it needs work. It's got deferred maintenance of 10 or 20 years, and anybody can relate to that. So Andrew, help us understand. Take maybe a recent deal, a recent asset, and say, okay, here's maybe the most important 4 or 5 things that we're going to do to this park to increase the NOI, have that NOI growth, but do these value add components, filling in vacant lots, utility efficiencies, aesthetics. Describe that, and even maybe the deal that you're going to fly out here in the next couple of days. What's on your checklist? Like, what are the first couple things that you're thinking, how can I make this park better? And I think, again, our audience, doesn't matter if you're in mobile home parks or you're in apartments, single family rentals, all these management efficiencies can relate to your business about what you can do to make your more net operating income for you too. So Andrew, tell us about that. What's on your mind with some of these assets you guys just took over?
Definitely. So about a month ago, we bought another property in Fort Wayne, Indiana. This would be a great example. It had 57 lots. At the time we bought it, only 26 were occupied. The remaining lots had homes on the lots, but they were all empty. There was no one in them. The owner is an older gentleman, moved to Florida. He used to live in Fort Wayne. He moved to Florida and was trying to manage this mobile home park from Florida. But when he left and went down to Florida 10 years ago, the park was full. But now, as these units have gone vacant, he used to rehab the units himself when he lived in Fort Wayne. But now that he's in Florida, he doesn't have the energy to hire contractors and do things like that. So he's just let these units stay vacant when they would go empty. So now this asset is, less than 50% occupied. We're able to come in, buy it at a discount, and we walked through all these homes before we bought it. It's going to cost around $3,000 to $4,000 to put some new flooring and new paint on the walls, and we'll be able to sell these homes for $5,000 to $10,000 and then collect lot rent on each of those units that currently are not occupied. So that's one example of some value add. The property that I'm flying out on Monday to in Nebraska, that's a really nice property. There's 89 occupied out of 90. So we're going to buy one home, bring it in, fill a vacant lot. The real value add component in this park is twofold. Number one, currently the park, the owners of the park are paying for all of the water for all of the residents. So we're going to install sub-meters, and we're going to bill back the residents for their consumption. And in other properties, when we do this, that reduces our expenses by our utility expenses, completely off of our P&L, which ultimately will increase the value of the property because the income goes up. So also, total consumption usually drops by like 30% because now people that are having car washes and dog washes and everything else, now they're more concerned because they're paying for their consumption. They're going to reduce their usage. So that's a huge component. We're going to bill them back for their utility usage. And in addition to that, we're going to fill a vacant lot. Lot rents also, like what they're paying to be on the property, are very low. They're paying $150 a month right now. Lot rents in the market, where other mobile home parks are in the area, are closer to $250 a month. So we're going to do some modest rent increases and, increase the value of this asset.
My newest and most powerful real estate investing book, The Flip System, is now available. And for a limited time, you can grab your free copy at getflipsystem.com/podcast. Using the same proven principles, secrets, and investing strategies I'm sharing in this book, I've been able to personally close over 750 highly profitable real estate deals over the last 15 years, make over 400 private lender loans, raise over $30 million of private money, and acquire over 2,000 units of apartments. Get my newest book now for free for a limited time at getflipsystem.com/podcast. That's getflipsystem.com/podcast. And the interesting thing about mobile homes is if you're renting that out for $250 a month, the space, just the dirt.
Yep.
There's not a whole lot of expenses that goes with that $250, right? So a lot of people buy a single family home, fix it up, refinance it, the typical BRRRR method, right? Pull some cash out of it, and they're making maybe $200 to $400 a month, but then they've got the asset that they own, which is great. I mean, we own a ton of single family homes, and we love them, and there's depreciation, but there's upkeep, dealing with tenants and turnovers and still water and sewer and things break. You don't have to deal with any of that, and you're still getting about that $250 a month, which is fantastic. I love that idea.
Yeah, it's great. About 30% of our gross revenue is spent on expenses, which are taxes, insurance, and the various, general area, common area improvements, things like that.
Got it. So when you're looking for mobile home parks, help our audience kind of understand, how do you find one? How do you you don't have to do a deep dive here, but on evaluation, what are some thoughts on how do you find a mobile home park? Is it through commercial brokers? Is it, again, through mom and pops? Is it direct mail? I don't own any mobile home parks, so I'm curious to know the answer for my own education. And then when you're evaluating that deal, again, comes down to comps, comes down to rents. What does that look like? And what are some things that you're looking at when you have a deal, maybe or an executive summary sent to you of a potential deal that you could buy? what are some maybe 3 or 4 things that you're looking at right off the rip to say, okay, where's the potential growth? Where's the potential value add? Where's the potential rent increase?
Yeah, great question. So, you can find mobile home parks through any commercial broker. That's one option. My background, I started out flipping houses around Central Florida. So, I prefer to buy stuff off market. And just like when I was single family home, wholesaling and flipping houses, we did yellow letters. We went direct to owners with different, mailing campaigns. We do cold calling, and through that you can do the same stuff in mobile home parks, and that's what we do. So we have a whole campaign. We drop voicemails, we text. We have different marketing set up to attract mom and pops that own these assets to reach out to us, and then we're direct with the seller. We're usually able to get better deals because we don't have to pay a commission and so forth. So
nice.
That's how we find the deals. And then what do I look for? I look for the number of lots. Our company now, we look for deals 50 lots or higher. Just you get more scale that way with the more units. We look for public utilities. The utility infrastructure is huge in mobile home parks. These assets were built, 50 plus years ago. So we're looking for parks that have, city water, city sewer typically. That would be the perfect setup. But other times, wells or septics, we'll look at properties with those as well. But you want something that has good utility infrastructure because it'd be very expensive to try to replace something like that. And then I'm looking at what the market is, what the market rents are compared to what the current rents are, and if there's any room to increase that. So those are just a few things that I look at. Perfect.
Love it. Andrew, you mentioned that you started flipping houses in Central Florida. So tell us, how did you get your start in real estate? You mentioned that flipping houses. Were you doing wholesaling? Were you doing fix and flips, turnkeys? How did you get into it?
Yeah, so a friend of mine actually had a wholesaling business, and I just became very intrigued in what he was doing. So I left my corporate job to come and work with him, kind of underneath of him, and help out. And through that process, I started marketing myself through bandit signs, mailing out letters and so forth. And that's how I initially got started, was focusing on the low income areas of Orlando and, wholesaling deals for cash. And that's where I got my start.
Nice. And tell us about your first jump into the manufactured mobile homes. Like, if you're wholesaling and then started doing, flips, but ultimately you learn about your first mobile home park. Everybody likes to talk about their first one. Tell us about that. How did you get into and make the pivot into mobile homes?
It's actually a funny story. So through my wholesaling efforts, I mailed a yellow letter out, and I got a lead on 2 manufactured homes in Ocala, Florida, which is just north of Orlando. And so I went up there and met the seller. I knew the seller was motivated. It was off of a probate, situation. And I could buy 2 mobile homes that were like really nice, manufactured in the 1990s, vinyl sided shingle roof homes. I could buy 2 of them for $2,200 cash. And I was like, this is my first exposure to manufactured housing. I didn't know what I was doing. I just knew it was a motivated seller, and you couldn't build these things for $2,200 cash.
Right.
So I was like, all right, I bought them. I got the titles, and I came home and I got on YouTube and I typed in how to make money with mobile homes. And nice. I came across this guy named Lonnie Scruggs, and he wrote a book called Deals on Wheels. And he tells people how they can buy mobile homes and then fix them up a little bit and then sell them on contract to the end buyer. So I ended up doing that with these 2 homes. I sold them for $3,000 down each. So I got my money back on the down payments, right there. I got $6,000 off down payments. And then I sold them for $250 a month for 5 years. And nice. It was just like, I was like, this is it. This is amazing. And the demand was insane. I put an ad on Craigslist for the home I had available, and I had like 25 people reach out in the first 2 days. So I was like instantly attracted to manufactured housing. And that's ultimately how I got my first start. I ended up buying 19 more of those individual mobile homes. And through that process, I met a park owner who told me that, the value of owning a mobile home park was, there's a lot of benefits to owning the real estate versus the personal property that is the mobile homes themselves. Because you can get more leverage with financing, you can get depreciation, and just the building wealth was built through owning the real estate. So that was an aha moment for me, and I went all in. I got my hands on as much education, as much content as possible about mobile home parks. And I committed myself at that point to just buying my first park. I literally went home after that conversation and wrote on my refrigerator with a dry erase marker that I wanted to buy my first mobile home park in 2016. Nice. And I didn't end up executing in 2016, but in 2017, the following year, I bought my first park. And ever since then, we've been on an all-out sprint acquiring these assets.
Nice. Yeah, sometimes you got to sprint, right? I mean, the journey is it's a marathon, we all know, but there's times in business where it's just head down, 16-hour days, let's go, look at every asset, and there's such a thrill, especially in that initial growth phase for that. Can't sleep because you're so excited. It's just an awesome feeling. So Andrew, let's jump in a little bit more to today. A lot of our audience continues to think like we're in the middle of COVID and all this stuff is going on. I don't know what anybody's beliefs are around COVID. Some people believe it's, oh my God, it's such a terrible. Other people are like, dude, the survival rate is almost 100%. And other people are like, it's totally government inflated. Then other people are like, no, it's all real. I don't care about any of that. What I care about are collections on my buildings. What I care about are people paying the rent. And it, just like you said, on our apartment assets, especially the B and the A and B assets, almost 100% collection rate. The collection rates for April, May, and June are almost the same exact as February and in January. A little bit more breakage in the C-class stuff. The collections are still really good, but not quite as good as the A and Bs. Tell us about mobile homes. What are you guys doing? You said your collections are really good, 95%. Have you guys had to be more creative? Have you had to reach out more? What have you done specifically in this environment just to make sure that you're optimized and collecting as high as rate as you can?
Yeah, so it's not hidden that mobile home parks are a collections-based business. It's affordable housing. So we're 95%, any month, really, COVID or not. So that extra 5%, we always have to work for, and we do. We do. So during COVID, though, one thing that I've noticed is that a large portion of our tenant base are on fixed incomes, and they're getting Social Security income or SSI, and whether they're not dependent upon a job to pay rent. So that is a huge factor for us to diversify collections or not. But we have had some tenants that needed some time until they got their unemployment started before they could pay us. So we would sign payment arrangements and things like that. But overall, we've maintained above 95% collections, and that's something that I think speaks volumes for the asset class as a whole.
Are you ready to automate and explode your real estate investing? We're searching for extremely motivated individuals who are sick and tired of wasting time and want to finally see real results from their real estate investing business. We're searching for investors looking to get to the next level and become a bigger, better version of themselves while being a more successful real estate investing entrepreneur. Apply for mentoring and coaching at joshcantwellcoaching.com/podcast. That's joshcantwellcoaching.com/podcast. So let's talk, Andrew, for a second. So last sort of business question, and then I want to ask you some personal questions about, self-development and health and wellness and energy. I like to talk about that as well on the podcast. But so if you look back at your experience, especially this last 5 years or so, there's probably a lot of things you've learned, 1,500 lots and units in the last really 4 years, 2017, 18, 19. You've learned a ton. So tell me, as you optimize your business today, and you just bought these couple of parks in the last few months, what are some things that you're doing today that you're like, man, I'm so glad we're implementing these strategies today. I wish I would have known this 5 years ago. And specifically, maybe speaking to our audience that's maybe on the newer side, who's maybe interested in mobile homes or interested in building a rental portfolio or apartments. What are some things that you learned over the last couple of years, just invaluable stuff that you wish you could tell your younger kind of former self?
Yeah, definitely. One of those things that I would tell, someone newer just starting out is I would say, hey, focus on finding, good quality deals, because anybody can do that. It doesn't take, all the money in the world to find good deals. You literally could drive by a commercial property and stop in and try to talk to the owner, and you could be that first person that's ever done that. So I would say focus on the deals more so than the money. As we've taken on investor capital, we've been very, very fortunate to have a good amount of investors interested in investing in the space. So it's usually not about the, that's usually the easiest part of putting a deal together, is raising the money for it. But the bottleneck in our business is finding really solid deals, especially as the asset class becomes more competitive, as more people are funneling in. So I would say, find good deals and focus on that, and the rest of it will come together. You'll be surprised how the money flows when you have a good solid deal put together.
No doubt. And I think too, you're buying a mobile home park, you're buying an apartment, even if you plan on buying a single family or a duplex or a quad, you plan on owning that asset for a long, long time. You buy it right, finance it right, take care of it, don't ignore it. I think I don't know if it was Teddy Roosevelt who said it's about the most secure, safest asset in the world. If you buy it right, finance it right, give it some care and some love, it's got all the tax advantages, all the breaks, and everything that you'd ever want compared to another asset class. And so, as the stock market continues to be super volatile, which we all know it is right now, but it's always been that way. People continue to flock to mobile home parks, apartments, real estate as a way to really get a great return and have really a lot of safety and security. Andrew, one more business question before I jump into to help me understand what's a typical model for your syndication. So as you're raising for a mobile home, are you doing a pref return? Are you giving them a piece of equity in perpetuity? Help me understand that.
Yeah, all of our deals are set up based off of an infinite return model. So we will usually offer some sort of pref, usually like a 7% pref, and then 50% of the equity in an asset that we acquire. So we'll come in, we'll buy the asset, investors are getting 7%. Then, we're in a value add stage. So we're raising enough money to increase the value to get it to a higher level immediately. And then we try to refinance usually within 12 to 24 months, pull out all the initial equity, pay back investors, and then investors will still own 50% of that asset and get quarterly distributions off of that cash flow into perpetuity.
That's great.
So that's our value add model.
It's exactly what we do. I love it. Same thing we do with apartments. Fantastic stuff. Andrew, listen, all of my audience would like to be a bigger, better version of themselves. Healthier, more energy, maybe more wise, healthy, wealthy, and wise. I think that was Tim Ferriss's model for his book, Traits of Titans. Everybody would like to be healthier, wealthier, smarter. I know you're on a health kick. You take care of yourself. You played college football. Tell us about some things you're doing today. What are some maybe books, podcasts, health and wellness tips? What are some things that you do personally that you think help you be the best version of yourself? And some things that you can maybe give it back to our audience to help them be a bigger, better version of themselves.
Yeah, so I'm currently training for an Ironman. So with that, taking
you had to go there, huh?
I had to go to that level. It's just,
right to Ironman.
I mean, that is like a high level, but I really enjoy training for them because it's more of a mental thing. It's how do you train your mind to treat yourself and let yourself know that you could do anything if you put your mind to it and you really focus on doing it. So in terms of health and wellness, I drink a lot of water. That's one tip that I highly recommend anybody do. If you're having trouble with energy levels or with weight problems, you're going to eat less if you're drinking more water. So that's one thing that I'm a big fan of. Number two, I do intermittent fasting a couple times a week. I think that helps kind of keep some of the inflammation off and helps with various things. And number 3, one thing that I really enjoy doing is just taking a walk a couple times a day. I just try to get outside and just take a walk and kind of clear my head. I'm in the office a lot, kind of getting things done, but I always take time to just kind of get out and get away a little bit. So, but yeah, with Ironman training, it's a mental thing. I'll never forget the first time I ran 10 miles. I came back and I literally thought that my legs were going to fall off. Like my knees were hurting. I felt like an 80-year-old man, where they're talking about arthritis and everything. And as I continued to build a little more every week and a little further every week, now I could run 20 miles and come back and, have a whole day afterwards and not even be an issue. So
wow.
I think that, training yourself to realize what you're actually capable of is huge and, helps with the mental side of it as well.
That's fast. So a couple quick questions around that. So how long will it take you to run 20 miles?
I usually average around a 9 to 9:30 pace. So I'm not flying, but it's not bad either.
Okay, nice. And when you intermittent fast, when will you stop eating in the evening? And when will you allow yourself to start eating the next day? How long is the fast?
Yeah, it's usually a 16-hour fast. So usually around 7 or 8, and then it goes till lunchtime the next day usually.
Okay. And you mentioned, for our audience that doesn't understand fasting, what are the benefits? You mentioned, reducing inflammation, the organs inside, your muscles inside, the whole thing. Your body kind of clears itself out by not having food in the system. So just describe that for people who don't know.
Yeah. I mean, if you've never tried it before, which a lot of people haven't tried fasting at all. And it's not just something that's like new age in 2020 that people started doing. I mean, people have fasted for hundreds of years. You can go back and look in the Bible and see fasting. So it's very healthy. It cleanses you. And, I just am a really big fan of it, especially, drinking lots of water during the fasts and really just getting out that inflammation and kind of just renewing your system, I think is very important.
Fantastic. Well, Andrew, any kind of final thoughts, kind of parting shots, words of advice? And of course, if anybody wants to reach out to you to connect with you, whether it's bring you a mobile home deal or invest in one of your deals or just kind of mastermind and share some ideas, also tell us where they can reach you, whether it's a website or on social media.
Yeah, another tip that I use that kind of piggybacks on the health and wellness. I got this one from Craig Groeschel, who has a leadership podcast on iTunes and such. But we don't eat carbs in the morning. Eat carbs in the evening. I've just noticed, or actually no, vice versa. So we'll eat carbs in the morning, but not in the afternoon because it kind of makes me more tired. I've found out. Mm-hmm. So that's something that I've implemented. But yeah, I would say whatever you're going to go into, if you got to have a passion and you got to go in all in. You can't just kind of step your foot in and say, okay, I'm going to try to get into real estate and I'm going to try to wholesale a little bit. You got to be very dedicated and you got to be willing to, withstand that initial phase that what do they call it? The sorrow, right? The initial phase of sorrow to kind of get through the rock. It's like, it's that initial phase where you're not feeling like you're getting anywhere, but it's building up. You're building that funnel and it's going to start flowing once you get over a certain point. So I would say just go in with a passion and don't give up too quickly. Don't give up before you reach the good stuff. And if someone wants to reach me and has questions about manufactured housing communities or, possible investment opportunities, they can check out my website, which is keelteam.com. That's just KEELTEAM.com.
Fantastic. Andrew, fantastic interview, bud. I really appreciated getting to know you a little bit better, learning more about mobile homes and manufactured homes, a little health and wellness. And I appreciate your story. Thanks so much for joining us today on Accelerated Investor.
Yeah, thank you so much for having me, Josh.
Hey, Josh here. And do you want to win a free Accelerated Investor t-shirt? All you have to do is give Accelerated Investor, our podcast, Accelerated Investor, a rating and a review on iTunes. Okay? Do that now. Then send us a screenshot on Facebook or Instagram or Twitter What we're going to do then is every week we're going to pick our favorite rating and review, and we're going to send that person a free t-shirt and maybe, again, some other cool, fun stuff as well from Accelerated Investors. So, again, don't forget to take a screenshot. Leave a rating, review, take a screenshot, send it to us so we know exactly who you are. And then once a week, every week on the podcast, we will announce a new winner. Don't forget to take a screenshot and send it to us so we know exactly who you are. We'll announce a new winner every week.
You've been listening to Josh Cantwell and the Accelerated Investor Podcast. Leave a comment on our iTunes channel and let us know what you want to learn next or who you'd like Josh to interview. While you're there, give us a 5-star rating and make sure to subscribe so you can be the first to hear new episodes. Follow Josh Cantwell and his companies, Strategic Real Estate Coach and Freeland Ventures, on all social media platforms now, and stay up to date on new training and investment opportunities. To start your journey toward the lifestyle you've always dreamed of, apply for coaching at joshcantwellcoaching.com.